and the commercial traders do the exact opposite? That's a great question, Lincoln. So here's something to consider. I don't look at commercial traders at all because commercial activity in the COT report has nothing to do with speculation. It is simply hedging. Let me mention an example. So the reason we only look at non-commercials or large speculators in the markets with our studies here of the COT report is because commercial activity is not speculating where prices are going to go next. It is simply offsetting risk in their own companies or commercial activity. So let's say you're a gold mining company and you're out there mining gold, right? You don't want to be subject to the swing of gold prices. That your job is not to speculate on whether or not gold goes up or down. Your job is to extract gold from the earth and then sell it on the market. But if your costs are going to get, killed if gold prices plummet, like you're paying all this money to mine, if the price of gold plummets, you get really hurt. So what the futures market allows mining companies to sometimes do is to basically short gold to offset the price of gold as they're pulling out of the ground so they can hedge their positions. There's no speculation of whether or not gold will go up or down. What you want to track, and this is why we do it, is the non-commercials or large speculators, because that is hedge funds who their job is to speculate where the markets are going to go next. We track their activity. We don't track commercial activity. That's the importance there. So commercial activity, I don't find to be very useful. We track what institutional money, whose job it is to forecast, we track what their thoughts are. Because again, we find that to be a little bit more useful. Are they right all the time? Nope. But knowing generally where they're at is important. Okay, guys, we got Chris Pulver. Last thing I'll say is if you want to get access to the Edge Finder, I dropped it just a moment ago. Try out the Edge Finder. Click this link. It's just been dropped in the chat. You can also find it in the description down below if you're watching this live stream recording at a later period. So there you go. We're going to take a quick break here. Thank a sponsor. And then we got Chris Pulver taking over the show, guys. Stay tuned. He's got you from here.
Hey, everybody. Happy Monday. Welcome back. I look a little disheveled today. We got back late last night, equivalent of 3 a.m. arrival, and get cranking this morning. And market's up a little bit, little pause. Had 2 trades, 2 winners this morning on the SPX, which was nice. We're up a little bit higher, no complaints. P&L's up on the day. I actually wanted to spend some time this morning reviewing, where we're at, top to bottom, bigger picture, and then also have a look at a couple of earnings plays this week. I was actually trying to pull a screenshot. I think I have one here. Earnings for this coming week should look something like this. Let me get a screenshot here and I'll show you. Here we go. The one notable I'm looking at is Netflix. Here's a screenshot. So United Airlines, Interactive Brokers. We have a lot of financials this week, which we kind of led with financials. Tuesday, we have Johnson & Johnson, Progressive, which has been at all-time highs. Schwab, Goldman Sachs, PNC. Again, financials, don't really trade those necessarily. Synchrony Bank, First Horizon, Citizens Bank Corp. I don't trade those. Abbott Labs, maybe, depends on the volatility. We'll see if Alcoa is in a good space for some aluminum love out there. But I was more looking ahead to Netflix on Thursday. That's after the close. And let's see here. Anything else? That might be the big one that I saw. A lot of it's financials. I mean, look at Friday. Comerica, American Express, Procter & Gamble's Defensive Regions Bank, Fifth Third Bank, Ally Bank, Simmons Bank. So a lot of financials still coming in this week, which, as we saw on Friday, has the ability to show if it's green and it's good and it's optimistic. That's probably a good thing for a lot of stocks. That is good for the consumer. That's good for lending. That's good for the JNK, which is our junk bonds. Okay, and everyone says junk bonds. It's really just the yield difference between AAAs, Bs, and Cs. If there's ever going to be a liquidity issue in the markets, then usually this is dropping off a cliff. And so far, it's been pretty well contained. Surprisingly, we've gone down a little bit despite the market being at all-time highs, but the breadth has been pretty good. I took a look at the heat map this morning, and about 66% of stocks right now are above their 50-period moving average, and about 67.5% of stocks are above the 200. So we have about 2/3 of the market in a bullish trend, above the 50, above the 200. Obviously, we know we have some stocks out there that are sitting all-time highs and making new highs, and that's great. The market is a little bit more bullish, which I'm okay with. I mean, obviously, watching it melt up and watching higher highs in the portfolio is never a bad thing. But let's get back to some comments here. Let's talk some top to bottom. I want to take a look at Netflix this week. I think that's one big earnings report that I want to price in. So NFLX trading at 720. Looking at the implied move. So earnings is on Thursday, which means a couple things. I want to see what it would cost me if, I mean, let's take a look at what the market expects. So my market maker move for Netflix is on Friday's expiration. Market's looking at about a $54 move on Netflix. Okay. Now we have seen Netflix surprise to the upside. We've seen like 80, 90, $100 moves in Netflix, and that would be great if you bought a straddle or bought a strangle. That would be decent, but you need price to cover your trade and move a lot directionally. If it does, you're not capping your upside. I've traded a lot of strategies. I'm going to try to avoid going into earnings season this time around. I'm going to try to avoid deep in the money credit spreads, because if I get assigned, some of my cash accounts especially can get a little bit tighter than I want it to be. So anyway, last week on Friday, if you were following my Pulver Alerts section of the A1 Trading Discord, I did do some dollar cost averaging into a couple of, it's a pretty diversified ETF look. Charles Schwab just did a bunch of splits. And so SCHD is a dividend ETF that has performed about 12% annualized for the last, I think it's up year to date. Let me take a look at here. Year to date's up 13%. The last, let's see, the last 1 year, so going back to like Q4 of last year, it's up 21%. 3 years still up 12%. Last 5 years, 57.5% plus dividends on top of that, which dividends you're looking at around 3.42%. But they did a split. This was I think a 3-for-1 or 4-for-1. 3-for-1 split. So this was trading in the 70s, $70, $80, and they split back to 28.57. So I bought some shares of SCHD. I bought some shares of SCHG, which is essentially large cap growth, which is also at all-time highs. I'm pretty confident that, yes, I know there's rotation that needs to go outside and broaden out from the Mag 7, but I also know that the Mag 7 is probably our moat in the U.S. economy. Google, Microsoft, Amazon, Netflix, Tesla, Meta, whatever, you name them all. They have to do well. Nvidia, throw it in there. They have to do well. They are expected to do well. I just wonder if the market is ever going to think like, oh, they're not earning enough, and then the market kind of craps on Mag 7. But for the most part, it's like every large cap ETF is being bought by 401ks. Every large cap ETF and all this exposure is in there somewhere. It's always going to be a pretty safe bucket to be in. And so I'm going to buy this. So SCHG, SCHD, and then I also got into an FCTE. There's a guy out there that I follow. His name is Warren Pies. He's been awesome. I followed him for the last 3 years now. A lot of podcasts, a lot of consulting, but he just does awesome top-down macro research. And so he and his firm launched an ETF called Full Cycle Trend. So FCTE, they basically rotate in and out of 20 stocks throughout a 12-month period, and it's all based on performance metrics, momentum metrics, and they're going to rotate in to make sure that they're checking all the boxes. And in an uptrend, it would be essentially like this. And I'm kind of paraphrasing a basic strategy, but they're going to cycle through every different sector, and anything that is up in a healthy bull market with good financials, and we pull back to find the 21 or the 50 or the 100, they're looking to buy dips, buy dips, buy dips, buy dips, and just stay in these full cycle trends. That's what they call it. So I bought some shares in that as well. So those are kind of set it and forget it. Those are dollar cost averaging. I allocated about 5% of the portfolio to that just to let it sit and run. And if it goes higher, great. And then I've got plenty of buying power to get more active in options, which is what I want to take a look at right now for Netflix. So I'll take a look at Netflix. Let's go to the expected move. We're looking at an average move of around 11.89%. We can see we've got some highs and lows. Sometimes it is above it, sometimes it's not. I think I priced this out or maybe took a glance at it last week, and we had about 5 times it was above the expected move, 5 times it was below. Okay. What is the ticker there, Andreas, for that? And Goshi, I'll take a look at euro dollar. Yep, we'll take a look. So I want to price out some Netflix here. At the top of the hour, do I have is Nick Phillips coming on at 11 o'clock? If so, I'll get through Netflix, kind of price it out. That's kind of the only earnings play that I'm looking at. Oh, 1810s. You're talking like, all right, what market is that? Is that a Chinese stock or is it Japanese? That's it looks like it's Chinese. Okay. Um, I mean it looks a lot different than the Hang Seng, the Alibaba, Baidu, FXI, the stuff I've been following here, which has been good, bad, and different. JD's at 45. Oh, sweet. I might get JD called away. I rolled that out this week. This should be a good little income play. I rolled this on Friday. So right now, I think I updated this in my Telegram. Let me go to JD.com. I'll take a look at that 1810 one. Yeah. So my JD stock, I ended up doing a roll last week. So right now, I would get them called away for $1.37 a share. If it stays above $43. I mean, I might get a little tricky and roll this one more time. Maybe not. I don't mind taking the money. So $1.37 times 500 shares, I'd make $685 by Friday as long as we stay above $43. So that's looking pretty good. KWeb stabilizing around that 30%. FXI stabilizing around that 30%. I mean, one high probability move would be something like this. We go low to high, we pull back to the 30%, we try to just get back to the high. I said this when this stuff started to take off to the north on these China stocks. If we get a bull flag, that's a good thing. A bull flag is a good thing. You know, it was a little weird to see it like rip the way that it did and then not pull back. But when it did, it pulled back violently. So the fact that we stabilized for at least a couple of days of trading tells me that we might be at least in some sideways chop, which in a bull flag setting is totally fine. Okay. All right. Let's take a look at that 1810. I mean, if you can buy it and you like it, I'll take a look at the snowflake analysis here. See if I can find it. See if it's even listed at 1810 or I have to type it in. 1810. There it is right there. So earnings forecast to grow. Says no risk detected. Snowflake analysis wise checks out, looks okay. Price to earnings, price to sales. Nothing that sticks out in a bad way. A little bit higher on the price to earnings. Let's see what its peers are. Okay, this is not a good thing. So this would be my only concern. Current price is $23.60. Fair value discounted cash flow model $6.43. So I don't like that. You know, I've never heard of it. I don't know what they do. What is the space? What do they do? Shows here telecommunications equipment. Strong buy says analysts. Strong buy says technicals. Smartphone hardware. Okay, so we got. Gotcha. Power Bank Pro, headphones, in ear. So it's mostly. It looks like it's smartphones and smartphone accessories, and lots of them, and probably on the cheap. Maybe or maybe not. I mean, there's probably some more research I'd like to do. But if I see that, I don't love that. I don't like, current prices here and its fair value is 266% lower. So at a glance, I'd say that's my only drawback is if you like the stock or you're already in it, then hopefully you're just managing profit. Because according to what this thing has cash wise and fundamentally, it looks like it should not be trading at 2360. So it is making higher highs and higher lows. Take a look at these spots on the left. If we get up into the 30s, it's probably a good spot to be moving stop losses. If it blows it off, great. But if it doesn't, don't give back any profit. Okay. They even have an electric car. Huh. Okay. I've used their smartphones. They're great, especially for the price. That's good. Yeah, that's cool. So I mean, just do some digging on the company. Do some due diligence there. All right, Netflix. Let me take a quick peek. So 18, 18, 22, 17, 9. This is the one I'm a little hesitant on. Is having this only show like a 9% pop, and the average is 11.89. So conservatively, I would say if I did a 10% expected move for Netflix, I could probably price this out pretty cheaply and look at a probability of going 10% on earnings. And I mean, I want to see how many days it takes to go 10% on average. So let's look at 10% as the cutoff here. So how many times in the last 10 earnings did we go to 10%? And if I go 8 days out, let's see, 10%. So didn't get there here. We got to 9% here, didn't get to 10%, so that one doesn't count. This one got there within 1 day. This one got there immediately. This one gets there within 3 days. This one gets there not. This one gets to 15 on day 5. This one gets to 10 day 1. This one gets to 9.3, 12.6 day 8. 9.3 is close, not close enough across that one out. And this one just cranked. So we have 1, 2, 3, 4, 5, 6, and 4. So I've got 6 yeses. Okay, so 6 yeses. That's supposed to be a check mark, and then 4 nos, which means there's a slight edge to at least hitting that 10% take profit that I want, or 10% move that I want. When I go back to my broker platform, Netflix was looking at about a $54 move by Friday. If I go to an extra week to the 25th, it's only going to move another $5. So there's a $59 to $60 move implied by the 25th. All right. So if I did the immediate knee-jerk reaction, we could see Netflix blow the top off. I mean, I could take a very easy trade here, just go directional. Let's see. What could I do? Am I willing to own some shares of Netflix? I think I would say yes to that. I am willing to own some shares. I still have that 111 trade, which if we have a huge drop to the downside, this is still an income play for me. So let me take a look at these Netflix plays. Netflix, go to trade history. And then I do want to catch some requests. I see ASML, I saw Eurodollar, I saw SoFi, Snap as well. Yeah, there's a lot of earnings. Look, we're going to have a ton of earnings in the next month. A ton of earnings. Okay, so let me have a peek here. If I just did a bull put spread, if I sell the 722.50 and I buy the 720, if I did, so the credit spread I've got to be careful of, right? Just if you're not comfortable taking assignment, or if the stock drops hard, the broker may assign me on that, and I've got to be prepared to work my way through the trade, which means I could still take the same loss, but as long as I'm getting $1.25, I'm basically doing a $1.25 risk for a $1.25 profit. Another way I'd like to trade this would be, what would it be if I just did a bull call spread? If I buy this and sell this, okay? So I would pay $1.32 to make $1.18. Probability that we go up, I'd say, is somewhat high. If I wanted to move this higher, let me make this. We should at least see like a $50 move. I would think, I would hope. So if I did, let's go something slightly in the money. Let's do like a 7. Look at the deltas here. So if I go, this would be an out of the money call at a 7. We're trading at 720. So if I buy the 740, this isn't too bad. So if I buy the 740 and I sell the 742, I'm risking $100 to make $150. All price has to do is get beyond that by Friday, which is possible. Okay, let me see if I can move this up even further. So if I go up from 20 to 40, that's $20. Let's go up to 50. So now the spreads are a little bit different. If I go to 750, 752, it's going to cost me 85 cents to make $165 if price can move up towards the top of this expected range. So this is roughly a 2-to-1. Okay, so if I do this, if I win, I get $168 per contract. If I lose $82 per contract. From current price of 720, are we able to make a $54 move, which would put us up towards 770? And this is a Thursday after market, which means it's only Friday. Only on Friday can we get this trade to have to be managed for close, right? And if it's a long option like a bull call spread, there's no exercise here. If it's above it, I can make $1.80 per contract. If it's below it, I will lose that 70 cents a contract. So I think I like this trade enough to take it. Let me see what a 745 by 747 looks like. Make 160, risk 90. I'll make this pretty cheap. I'm going to do something like this. Pay 90 cents, make, what's that? Pay $1.65 to make 335. That's a little bit better. It's the same trade here. I'll just maybe go 2 contracts. So I'm going to take this trade. This is a I'm gonna spend 87 to 88 cents on the trade. 85 cents would be great. I'm gonna try to buy this right now. Okay, so I bought that for 83 cents. and I'm going to see if that will go to full expiration. Okay, so right there, bought that for 83 cents. Similar, I'm just going to get these in all the other accounts. 83 cents, 9732. Okay, and buying power is pretty cheap. It only takes up about $83 in buying power. Which account did I just do here? That one's in. That one still went. Okay, let me pin this here. There. Okay, so I'll update that in the Pulver alert section. I'm buying the 750 call and I'm selling the 750-250. So it cost me 83 cents for a trade that should pay me out $1.67. Okay. So if I look at the mechanics on this trade again, max profits $1.67 if price is beyond 750-250 by Friday this week. My risk is $83. So I'm going to risk the full amount. There's no risk of assignment here because I'm long the option as opposed to short the option. I don't have any trade to the downside. If I were to flip this and say, okay, well, that is, $30 to the upside. If I were to do a bear put spread, if I went down to 690 here, if I buy the put and I sell the put, I do this one for, let me get out of here. So if I just do this separately, if I buy the 690 and I sell the 687.50, I pay 80 cents for that one. It's the same thing. Now let's do the math. Okay. So the math on this trade works out the following way. If I risk 83 cents on the call side and I risk 80, let's say 85 cents on the put side. So if I lose on one of these, let's just say I'm around both to 85 cents. So my loss would be 85 cents. Okay. If I win one side, I win $1. I mean, this is crazy if this is only costing me 50 cents. So I win $1.70 roughly. So I can basically take both sides of this trade. I can lose one, win one, and walk away with about a net 80 to 85 cents per contract, which isn't a bad play. But there is still there's a dead zone here that if price doesn't go far enough lower or far enough higher, then I'm risking on both of these trades. And it's a manageable loss of, about $160 per contract. If it goes nowhere, if price stays nowhere. Okay. Now, the other thing that I could do on this trade, if I clear this out, I could also sell the 717 and I could sell the 720 and I could collect $57 a premium, but I could bracket these in. Now, I need to see what the buying power reduction is. If I go to the expected moves, let me go to like maybe $60. So 720, 717. Let me go to the call side here. 717 go up $60. That'd be almost 770. If I sell that, so I buy that back. So that's the 717.50 call, and I buy the 770. What's the distance on that? 770 minus 7.7. That's a 52.50. All right, so I probably want to go a little bit higher than that. A little bit higher. A little bit higher. Maybe there. I'm interested in the buying power here. So that's about what? 90 to 17. That's $73 of potential volatility. And if I go $70 here, that'd be a 650. So I buy the 650 there. So I could take this and I could also collect a ton of premium. I collect $4,600 up front. Okay. But my risk is $2,650. That's a little much. I don't want to risk that much. Now I did this on Domino's Pizza and I was risking like $1,200 for a profit of around $2,500. And I took a partial profit and grabbed $500 within like day one of the earnings. But this is a little bit much. If price goes beyond my expected move, then there's a little bit too much risk on the trade. Buying power is a little pricey. It's 2407. Okay, so anyway, I'm going to keep the trading as is. I'm just going to go to the call side and trade Netflix that way for right now. Make it pretty straightforward. Do an in-the-money bull call spread. It's inexpensive. It pays out 2-to-1, and I'll just go to the upside and keep it pretty straightforward. Okay, I might consider a more diverse play here, but this one is fine for a little bit of upside, and that trade's fine. And the reason also is because I have this kind of 1-1-1 trade where if price does fall, I'm willing to own some shares in Netflix. Okay, so I'll get that updated in Discord here. I do want to do some top down. I got about maybe 20 minutes or so if there's guests coming on after me, which is cool. Okay. So let's talk. I saw euro dollar earlier in the morning. I saw some SoFi in there. Oil, gold, silver. We'll do the Nasdaq. Yep, we'll take a look at that. Okay. So here's the euro dollar. We're still looking at the DXY then, right? The dollar index. Dollar index is still catching a bid, and we're making consistently higher highs for right now. Uh, I am still wondering if this October zone is a pullback on the dollar into this inefficiency right in here, and at some point this starts to turn. Okay, I'm still wrapping my head around like, will the dollar get stronger as the stock market's making all-time highs? Usually that's not the case, but could it happen? Yeah, it could happen. But euro dollar and everything else, I mean, look, dollar's been up and it's been stubbornly drifting and going higher. I don't like buying the dollar high. I don't like selling the euro dollar lower. Okay. I treat currencies very different than stocks. If stocks make new highs, I might not like buying all time highs or new highs, but usually that momentum is so fierce in stocks that they just keep going up. Currencies are different. I never want to buy high or sell low in a currency. The only thing I'd be looking for would be some type of bull flag. So if this dollar is going to go up again, it maintains some type of bull flag posture. That looks pretty good. Same thing on euro dollar to the downside. That's going to be your biggest correlation. And we're just dropping from a range. And this is what I see sideways. This is the same thing as the dollar index. So if we're going to go equal highs, we drop and we, go sideways for a bear flag, or we have a little pullback here and then a lower low coming. Look, we might not get that. This dollar index might just keep moving and the euro dollar keeps dropping. But if we get back into this support zone, I wouldn't mind picking up some scooped up support levels on the euro dollar and just trading back into the range. We come back to 107, 106, 105. I wouldn't mind scooping up some euro dollar longs and just position it for halfway back to the range, all the way back to the range highs, and just try to trade the range on the dollar. Okay, pound dollar. I'm seeing that right now. Same thing. I mean, if you're talking about dollar crosses, what's your feel on the dollar index? The dollar index is bullish, and it's been bullish since we had that bear trap at the bottom. Pound dollar's looking the same thing. I mean, if I'm going to scoop up any pound dollar, it's either going to be high, low pullback, and then looking for a fresh low, or it's wait for this thing to be done and get exhausted and show some oversold conditions, and look to see if this trend line will hold as support, and then look to buy it. Get some confirmation down here around 28 or 2600, and then you look at some buy trades. That's about all I see. I'm not interested in like scooping up higher lows, higher highs. I want to see if the dollar can really play out this range before I get aggressive on the dollar. Okay. All right. What else? We saw the Nasdaq. So let's go Qs. Let's go US 100 or US Tech rather, whatever the CFD is. So we just broke above the September 26th high. We're not at all-time highs yet for the Nasdaq, but we're trying to. One thing for this week, this is the trend that I'm watching. We are in a pretty healthy looking bull market, if you ask me, on this setup right there. 50, 100, and 200. The all-time highs are right back here. I'm wondering if the market is melting up, pulling back a little bit, melting up, pulling back a little bit. The only time this would maybe consider resisting would be at these all-time highs from July, right? And even from there, as long as this trend line, I'll mark this in thick black here. If that trend line doesn't get broken by price, I think the Nasdaq still looks good for bullishness, postured bullishness, still momentum trying to go higher. So it's still catching up. Like the S&P is at all-time highs, the Dow's at all-time highs, but the Nasdaq looks pretty good to stay postured bullish. Okay, Russell. Let's go Dow for a moment. Dow is at another all-time high today. S&P, I believe, is at another all-time high today. So that's pretty good pushes here. I mean, you got to wonder if this market can just keep pushing through the election, through the end of the year. The Fed is obviously going to be looking at cutting rates by November, December, per the futures market, the watch tool. That's what it's suggesting. Probability is they're still going to cut by 25 basis points for November and cut So that'd be one cut, 25 basis points. And then the higher probability is still a cut in December. And then we'll see what the potential pause looks like through 2025. Markets already made those adjustments into 2025. I think they're expecting about 50 basis points less in rate cuts. The yield market has still been pretty stubbornly bullish since the turn after September 18th. If you go to the 2-year yield, it's still turning. The 10-year up higher. The 10 and the 2 have bounced back up into this reinversion phase. So we were disinverting, getting towards the reinversion, and it's bounced back up. So interesting stuff. I don't know what the ramifications are for this outside of if we're going down, that probably shows a better job market. If we're going up, that's showing probably inflation. I mean, and we know this, like the PMI numbers have jumped up. CPI and PPI both came in hot last week, and the market's like, fudge it, let's go higher. It was for fundamentally, it was kind of a counterintuitive move last week, but it's not enough to derail the market. The market doesn't care right now about slightly hotter inflation. The market has destination, maybe 6,000 on the S&P, and if it does, I'm not trying to fight that. Okay. So anyway, we'll see how it plays out. Right, oil, gold, silver. Let's take a quick peek at that. Let me get rid of my moving averages, and then if we got some other stocks and stuff that I missed, I remember I got the Nasdaq. We just took a look at that one. SoFi, Snap. Take a look at those. That's fine. What else? SoFi, Snap. I think I saw an A. What else? Was there like a semiconductor in there somewhere? Yeah, we'll take a look at gold. All right, so oil. Oil is being pretty stable. 74.23, pretty stable. I'm not buying oil right now. I'm out of my CL positions for futures. I'm just going to let oil do its thing. I think that really oil is just going to serve as a barometer for inflation. If oil's up, inflation is going to suck, and it's going to come back in a way that nobody's going to enjoy it, and it's going to possibly, be something that threatens the economy, threatens the slowdown, threatens stagflation. All these things become a reality. But if it just kind of bounces around here and stabilizes around 60, 65, it's just support. If we break lower, okay, cool. Inflation is probably trending lower. Oil prices are dropping off a cliff. What do commodity prices do on top of that? But is it going to cause more concern in the Middle East? There's only 2 countries that love oil at cheap prices, and that's Saudi Arabia and the U.S. Everyone else is not wanting to see lower oil prices. Okay, gold and silver. Gold, not quite to all-time highs. I still want to see if gold can pull back a little bit. I hope that it can. 50, 100, 200. I'm still waiting to buy some dips on gold. So I'm just going to be patient, see if this will roll over a little bit. Dollar's been getting a little bit stronger and still pushing higher. So I'd like to see if gold can continue to drop a little bit. Silver, I still like silver, holding this structure, break the trend line. I know it's right back up here at these resistance levels. But if we're just breaking and accumulating, then hopefully there's more upside here on SLV and SI for futures. Bitcoin, holy shnikes, we got quite the run on Bitcoin there. 58 now to 66. Take a look and see how these correlations are happening with the ETFs. BITO looking a lot better. I've got an income play here. The 16 and 15 puts that are looking pretty darn good. I might actually look at this right now. Let me see if I can do BITO. What's this going to cost me if I buy a leap? If I go out to January 2026 and I want to buy an in-the-money call, this is not bad. I can buy a $14 call for $5 and see if this thing can revisit highs all the way to $33. So that put me at a break even of 19. Okay, if I go from 19 to $34, let's say we get to these highs at 70%. I can turn that option contract. Let me do some math here. I will essentially turn this into 100 delta. And if we go from 14 to 33, that's a $19 move, okay, on a $5 debit. So do the math on that. If I have a $19 credit and I paid $5 for it, that's a 380% return. That's not bad. And that doesn't require Bitcoin going up 380%. That's just using an option chain and using leverage. So I think I'm going to take this trade. So I'm going to go out to January 2026. I'm going to buy a deep in the money call at $14 for $5. And I mean, just one call option's fine. 2 would be better, but then I'm risking $1,000. But I'm going to go out and buy this bad boy. So if I turn, $500 of risk into, that would be, what's my net position here? So if it turns into 19 bucks minus 5, I'm at 14 divided by 5. That's a 280% return. So I could take a $500 risk and turn it into about $2,800 of profit. I think I'm comfortable doing two contracts here. Gary Goodman, did you not get out with me earlier this morning? Both of my trades, they were out in session. Or did I update them like right after the session? I thought, anyway, I'm glad. I mean, price has been cooperating. Yeah, that was good. Okay, so I'm going to do this call option here. I'm going to do two contracts. Two contracts, BITO, $5. I'm going deep in the money. I'm buying a 90 delta call at $14. That puts my break even right around current price. I'm going to buy two contracts. So let's go here. Filled at $5. $5. Regular price, $5, $5, $5, $5. Is that a Little Caesars commercial? Anybody? Just kidding. All right, getting these filled. Okay. So 1, 2, 3, 4, 5, 6, 7. Hang on a second. These should all be filled. This one get filled? Filled at $5. Filled at $5. 2. That one didn't get filled. BITO. Long the shares. Huh. Okay, all right. So let me try this one. And put this one in the account there. Ah. 585? That's way off. Jeez, that thing jumped up 85 cents. What the heck? Well, that's a big difference. I'll let that one just sit at $5 then. There it is. Got filled at $5. Well, that was easy. Okay. So I've got two trades to update for today. I'm taking a bull call spread on Netflix. I'll get that in the stock options trades. I'm taking a long call on BITO at $14 out to January of 2026. So I'm going all through, and this trade doesn't have to take all the way to January 2026. If we see a big appreciated move in Bitcoin and this instrument starts to get back up to these highs, that's good enough for me. We can turn this into a 280% gain right there. If it wants to go higher, it's uncapped. It's uncapped. There's no profit limit on it. So we can protect profit along the way, but I want to see if this stock price is going to go nuts. There you go. Good. Pulse is filled at 484. Good. Very nice. Okay. So let me add those into the Pulver Alert section. That's a Netflix trade. That's a BITO trade. I added in, if you saw those last week on Friday, I added in SCHD, SCHG, and FTC or FCTE. And I'll see what else I can find this morning. But we'll go a little bit longer here. CONL, I take a look at that one. We looked at gold. We looked at silver. CONL. Granite shares. I don't even know what this is, but let's have a look at it. Is this an ETF? Yep, this is an ETF, so I don't have a fundamental analysis piece on it. What does it do? Investment trust mutual funds. No thanks. Year to date, it's down 18.34% in a market that's been going up. Now, I don't know what the purpose of this is. What are they good at? Why are they getting their butts kicked for 2024 when everything's been up? I mean, sure, maybe it's a value play. This says deliver 2x the price return, less fees and expenses. Ah, Okay, for a single day of Coinbase stock, purchasers hold shares longer than a day. Will need to monitor, rebalance their position. I'm already saying no to this. Personally, there's no way I'm going to trade a 2-3x leverage instrument. No thanks. The only time I'm doing that is short term. I'm talking about days at a time. That's it. Like single days. I'm not that interested in something. Yeah, I'm not in it, man. So if you want to look, I wouldn't mind just trading Coinbase. Coinbase is totally fine. I don't want to trade leverage ETFs on anything. Okay. I don't want to trade leverage ETFs on Amazon or Nvidia. And that was actually one of the big developments this year was, hey, people like Nvidia so much, let's create a triple leverage Nvidia. And so they did. And I'm sure people have made some money, but when you have Nvidia had like a 30% pullback, didn't it? Oops. Nvidia. This high to low from July, Nvidia pulled back 35%. So those double leveraged instruments pulled back 70%. How do you think traders like that? Do you think they panicked? Most did probably. So I don't like that stuff, man. Just my thoughts. I don't like the double, triple leverage. Plus, you can never control how they get repriced, and they're usually not to your advantage. So I just stick to the single leverage, stick to the underlying, try to trade options on them. All right. I think that's about it. Today the market's looking okay. 0.6% on the S&P, 0.6% on the Qs, 0.14 on the Dow, but also at fresh highs. The Russell's up 0.3, which outperformed on Friday. The Russell's up over 2% on Friday, and we're pausing a little bit. I do like the Russell. I do have some credit spreads pending on the Russell, and I'm still looking at the kind of the pullback windows here. So if this is a pretty good sign from last week to see that. If we have a break, maybe a pause, more upside coming. I wouldn't plan on like a lot of crazy good order flows unless earnings is really solid or we see that the election is a bit of a non-event and very supportive of current prices and current direction. Okay, DEO. I have no idea what this is. Another stock that's getting its butt kicked for 2024. It is down 10% over the last year. DEO. Debt net well covered, pays reliable dividend, trading of below estimated values. Okay, let's be the judge of that. Price earnings, price to sales, not expensive. Current price fair market, not bad. 45.8% undervalued. Look at some peers. It's 19.1 price to earnings. Peer average 36.4. So it's pretty well undervalued, which is not a bad thing. I've never heard of the stock. Is it liquid? Is it something we could trade? I look at it right here. It's already come back down to retest. It's not there yet, but we had a bottom. Looks like that August 5th bottom, right after that was a decent low here on $120. I would be willing to hold out in a stock like this to see if it was able to come back to the COVID levels. It might be, I don't know. If it was 120 down to the COVID low, maybe it's worth taking a stab at it if I could trade options on it. So let me see if there's options on this. DEO, common stock. You're trading monthly options right now, which isn't super liquid. And it's not. I like a little bit of tighter options and much better bid ask prices. So right now, if I went out to just do like a standard credit spread at like 45 to 60 days, I can do December. If I do a bull put spread, I've got a $5 wide. I get $1.83 for it. Not my favorite. Open interest wise, it's very quiet. These open interest contracts are tiny. So it's not a super liquid stock if you're trading options. If you want a dollar cost average into it, I don't think that's a bad play if you really like something. I would just look to see, okay, well, if we put a little bit in here and a little bit in here and a little bit in here, is this stock good enough fundamentally to turn the corner? Right now, there's really no technical signs of showing bullishness. It seems to be somewhat of a good value. We've turned at 120 up to 134, but the first thing I see is this COVID low, and it's like, well, see if we get there. I buy this thing at $110, $105, $100 and see if it holds that COVID low. Then there's some upside. But until then, I don't see anything about the stock that looks that attractive until we break that trend line. Okay. Good. Francois says get out profitable this morning. Very nice. Yeah, it should have been, I mean, 1 for 1, 2 for 2 this morning on DPP. That's good. Okay, everybody, if it's after 11, I might have to bounce. So I'll let you go for today. I'll get the Pulver Alert section updated in A1 Trading. Netflix, bull call spread, BITO long call. That was a 90 delta. And I'll get those screenshots and everything added in and tag everyone on that. And thanks for being with us today. And we'll see you tomorrow. All right, thanks. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.